Hey everyone, welcome back to the channel. Today we have a special guest. He's Matt Farley, managing partner at Maddie Capital. If you follow Rocket Lab, you're probably already familiar with him. He's often on the weeklies and he has his own channel as well as a pretty active Twitter account. So, Matt, welcome to the channel. Definitely long overdue to have you on.
No, I appreciate the opportunity. I know we exchange a lot with respect to Rocket Lab, but it'd be cool to have a general conversation about everything. And yeah, I've been doing YouTube for a couple of years, so always fun to collaborate. That's part of the best part about doing YouTube is meeting up with different people and expanding your network. So that's always fun. So really appreciated it. I had nothing to do this evening. You messaged me, and I was like, "Why not now?" You know,
Yeah,
it's
we
always a good time
really
to
we
connect.
literally threw this together in about like 10 minutes for people
Yeah. Well,
wondering.
you said half an hour, and then I I realized I was falling asleep on my couch, and I was like, well, and then I woke up and I was like, oh my god, 10 minutes from now, and you're like, let's do it. I was like, all right, let's ride. So always a good time.
Yeah. Okay.
Yeah,
So, first of all, I just wanted for those who may be a little less familiar with you,
yeah.
just let us know a little bit about your investing background, how you got into it, how long you've been investing, some of your biggest positions, if you don't mind sharing.
For sure, yeah. So I'm a petroleum engineer by education. So I've been doing that now, I guess, since 2013. Came down to Houston in 2012 for an internship, and I kind of just never left. Went to Penn State and graduated there in 2013. Then moved down to Houston. The rest was kind of history. Done some international roles as well, working in Trinidad and Tobago, and then doing some global work, and then came back to Houston back in 2020 time frame. So how I got into investing is just how like anybody else does. You get a little bit of money in your pocket and you have dreams of grandeur, and you're like, let's just figure out how to get into this, right? And so a lot of it's self-taught. You know, I saw a lot of my extended family do real estate, and I just, now I'm venturing into the real estate piece of it a little bit, but I always didn't like the lack of liquidity piece,
Yeah.
and so I like the piece about dividend investing. And so I kind of started off dabbling in that. And then really up until about 2019, 2020, that's where I kind of stood until I started recognizing that there's a lot of great opportunities if you know how to time it appropriately and look for the right things that you can really do great things like Palantir, Rocket Lab being kind of the two major ones that I'm doing right now. Um, but now also just kind of focusing on getting a lot of the capital into the S&P 500, and it's let that do its thing. And
Yeah.
really where I can, focus in on 3 to 4 companies that I think will actually have outsized returns. And that's how I really have dove pretty deep into Rocket Lab. And that's how I think a lot of people, at least on your channel, probably, if they know me through Rocket Lab
Yeah.
and the conversations we've had through that. But other than that, love investing. It's my hobby.
Hmm.
So I don't have many other things. Maybe travel, you could say, is another. But I'm fortunate, so a lot of people ask, how'd you get your portfolio so large? It's like, well, you put money into your hobbies, right? And investing is luckily my hobby.
Yeah.
So that's how I've been able to grow a 7-figure portfolio in the matter of about 10 years time. Is a lot of capital contributions and just some luck, and I'm
Yeah.
chasing the next M just like the rest of us, right?
Well, from what I've seen, it seems like you've done fairly well for yourself. So, yeah, congrats on that. And I
Thank you.
definitely agree, I think, on the concentration piece. Back earlier on in my days of investing, I started buying just like a little bit of all these different companies. And yeah, I just really couldn't track them all and know them all in a lot of depth. And I've kind of really consolidated that now in my portfolio. And I feel like it's paid dividends. But I have also started kind of similar to you. I started in a ETF couch potato kind of portfolio. So it wasn't only dividends, but it was, more safe,
Yeah.
if that.
Yeah.
So, good to hear your background. So, I just wanted to start off with what your thoughts are on the current market. We're kind of sitting at like all time highs here. You think we're getting a little bit overextended? Does this run have a little bit more legs? I know, everyone gets so excited when we're at these times, and I feel like that's the time when you need to be the most careful.
Yeah, it's funny because a lot of people know that I do like the investing thing at work. And so I'll have people like, you can always kind of gauge when things are getting a little frothy because people come out of the woodwork and start being like, hey, you have a YouTube channel, don't you? Like what's going on? So you can kind of gauge when everyone's kind of got their ears perked up. In terms of macroeconomic climate, I think that there's a little bit of room to go. I think the rest of 2024 will do really well. But I think there's going to be some headwinds. Like, will we see some like massive 20-30% pullback? I can't predict that, right? I wish I could.
Yeah.
But, in terms of valuations, things are getting a little heated. And I think this earnings season, this quarter, the rest of July, early August timeframe will really help dictate whether or not these valuations are warranted, right? I think luckily we've seen a lot of great progress from the likes of Amazon, Google, Microsoft, all having 20-30% year over year growth from
Yeah.
2023 to 2024 in the first quarter. Now
Nvidia
here we
great as
have
well.
exactly Nvidia, just, oh my God, gangbusters, like 4x growth in the
Yeah.
matter of like 18 months in terms of their run rate. It's insanity.
Yeah, I
So
got almost a 3x on that in a very short order, and that whenever I see that
congrats.
kind of thing, I start to wonder, like, okay, is this time to be a little bit more careful, maybe?
Yeah,
Not get
congrats.
too excited, but
Yeah,
yeah.
so I think it's really dependent. Are we going to see, you know, so for example, a pure range that generally Google, for example, will trade in from a price to earnings ratio perspective is like 22.5 to 25x is generally like a fair valuation. It's upwards
Mhm.
of 30 at this point. So maybe it's pulled back a little bit over the past few days, but it's in the high 20s. So if you're not having growth rates of say 20 odd percent year over year from Q2 of last year to Q2 of this year, is that sort of 28x multiple warranted? That sort of thing starts to play in your mind. So I'm curious, if they do meet their expectations for year over year growth that is on the street, I think things will do well. But I think a lot of companies have built in a lot of this premium, so
Mhm.
I wouldn't be surprised of a 5 to 10% pullback. It's healthy,
Yeah.
and we've seen a lot of stocks run from October of 2023 to now without any real breather. And so we did have a 5% pullback. What was it, a couple months ago, maybe a month or so ago? And other than that, there really hasn't been an opportunity for things to take a breath. So it depends the way you're looking at it.
Mhm.
In the next 2 to 3 years, I think things will kind of pace itself. You might have some pullbacks if there's a more extensive pullback, say 20%, which I don't really forecast. But if there is a 20% pullback, it might give you an opportunity to jump in and reallocate and get some opportunities. But I think in 10 years' time, I think
Yeah.
the market's always going to be cheap.
Yeah,
So
exactly.
it really depends on your objective and what you're looking for.
Yeah. The interesting thing was, going back say a year, I was always thinking like, okay, once we start getting rate cuts, that's when the market's going to run. But it seems like it's kind of happened before the rate cuts. Maybe it's
Mm,
just pricing those in at this point.
yeah.
But
Yeah, excuse me. I've noticed. I think it goes back to that October 2023 timeframe. Everybody was kind of stuck in. We just raised interest rates, some to 5%, 5.5% in the fastest way possible for the U.S. I know you're kind of looking at it from the north of the border sort of perspective, but 5.5% from the federal funds rate in the U.S. and in a very quick manner, and data was kind of looking like it wasn't going to stop. And so at that point, you started to have like a pivot towards the latter half of 2023 where people started talking about March rate cuts. And I think once that kind of happened, and it's kind of just been this hurry up and wait sort of pattern over the
mhm.
past 9 months there, of basically being like, okay, no, it's actually 3 months from now. No, it's actually 3 months from now. Maybe it's 2 months from now. Ooh, maybe it'll be next month. No, the date is not
Yeah.
there yet. And it's just been this like cycle. And so it it's interesting. But anyway, that's how I've kind of thought about it. But I anticipate that there's been so much exuberance with this. Hey, we're actually going to cut. By the time we do, I think data is going to show up worse than we expect because it's all in a lagging pattern. So once we actually do start cutting rates, it means okay, it's probably overdone. We know that the Fed is generally late to the
Right.
party when it comes to reading some of this data. And so I think with that, you might see, you know, unemployment kind of tick up a little bit more. Some other key things like default rates going up and really driving it home that, hey, you know, you probably should have cut rates beginning 6 months ago in order to kind of pass this out, but or like iron this out. But I don't see a massive catastrophe unless it has to do with maybe U.S. total debt, and if we actually hold ourselves accountable for that. Other than that, everything looks great.
Yeah, that's good.
But U.S. debt obviously is not. So
Yeah. Personally, just as I see my portfolio now kind of getting back to all-time highs, I'm trying to be more disciplined this time. Last time, I think it's natural to feel really good and rich and excited when you're hitting all-time highs, and that's when you can make mistakes. And I know I made some a few years back. So this time around, yeah, definitely paying more attention to, companies with real earnings and stuff like that.
so yeah. So does that mean like rebalancing into to companies that actually can survive a potential downturn? Like Rocket Lab's a good one, right? They have 500 million on the balance sheet,
Yeah.
but let's say Astra probably not. You know,
Oh
they're
no, they're gone.
yeah, exactly.
Um, yeah, I mean, certainly last time around, I was just buying all sorts of different things that were quite speculative, and this time around, not going to do that. Just going to stick to my highest conviction names, and I still do hold on to the ETFs, which I know some people out there don't like, but I do like having the safe side, and it definitely did help when we had a bit of a crash back. I think it was like 2021 after that run up.
Right.
In terms of Rocket Lab for yourself, where do you see the stock? Do you think it has a bit more room? We still haven't had that Archimedes engine fire yet. Do you think that could potentially push it higher? How are you thinking
I
about that company?
I don't think so. I guess for everyone's context, you know, we talked a little bit about my where Rocket Lab stands. I don't know if I've talked about this much on like Rocket Lab Weekly or just in general. You know, I've moved the portfolio around as it's matured and as the size of it's gotten bigger. Rocket Lab is my single largest actual capital investment in terms of a single stock. You know,
Hmm.
obviously I have the S&P 500. I have some other ETFs that I invest in, and Palantir has grown pretty well. So Palantir is actually the number one stock, but in terms of the actual contributions,
Right.
you know, I'm up like in terms of Rocket Lab, I think I've contributed like $85,000 to actually investing in Rocket Lab, to which now I'm up like 15 to 20%, and depending on what account you're looking at. So to give people an idea, I've always looked at Rocket Lab historically as having catalysts going forward that really, I would say, remove capital exposure risk. And so the hot fire obviously being probably one of the more prominent ones, getting Neutron on the pad
Hmm.
being another, and then obviously getting to a place where you're EBITDA positive
Yeah.
is getting to a place. And it's actually comforting to see that in Q1 we actually were pretty close to cash flow break even, which was nice. Actually, cash in the door, and I think a lot of that had to do with the space systems and actually moving out some of the Global Star satellites and actually being able to take payment in hand rather than kind of creating and just pushing capital out the door in terms of spending
Right.
and actually now getting paid through those. So it's nice to see it's getting closer and closer. And we're so in terms of capital exposure risk, it's getting better. I think Rocket Lab could get tied up with the macroeconomic environment, but I think with cut interest rates, things might get better. But you know the market's been doing really well as well.
Yeah.
I think Rocket Lab might be insulated though because it's so dependent upon I think getting Neutron on the pad and the next few deals that even if there is say were a pullback from all-time highs for the rest of the market, I think there's so much riding on the catalyst of Neutron, the catalyst of the hot fire test, and EBITDA break even that it'll be insulated from that a little bit. So I'm not going to say that you won't see a pullback from like where we're at 550, 560 right now to 450 in the next couple months.
Hmm.
But you're going to see a huge catalyst point when Neutron gets launched for the first time, especially if it's successful first time, if it lands successfully first time.
Yeah.
That's kind of bullish. I would assume maybe the third or fourth try we're actually able to land the thing, but because we've put Rocket Lab's put a rocket into space, but it's never landed one, right? So
Yeah.
that's a new thing, and that's a new task, and it's a little more difficult, right? I think a lot of people can put rockets into space. Landing one is another. Very few have done that. So
They have, to be fair, done a lot in terms of reentry with Electron, but yeah, the
true,
propulsive landing piece they've never done before. So
yeah,
fair to expect a bit of a learning curve on that
yeah.
one, I think.
But all in short, too long didn't listen to what the hell Matt was rambling about. Who the hell knows? But
Yeah.
I'm a firm believer. I have a Seeking Alpha article that I think still holds, and my price target's $15 by the end of the year next year.
Yeah. That was a good
And
article, by the way. You guys
thank you,
should check it out if you haven't already. Maybe I'll link it
thank you.
down in the description. So no trades happening right now for you on Rocket Lab. You're just kind of holding. Is that fair to say?
Uh, I think you and I both were selling cash secured puts,
Yeah.
and mine kind of came up, and they were up like 70 or 80%. And I was just like, you know what? Why am I sitting on this 3 grand? Like, and so today actually, I was just like, buy them all back. So I bought them all back. I needed to find like
Wow.
$4 in my account. So I sold like a fraction of a share of something else in my portfolio.
I'm
So I
interested in
just,
that strategy. I
yeah,
usually let mine expire, but
yeah.
like you must think the probability of those getting executed was now like extremely low.
It was, yeah. They were $5, and so I was honestly
Okay.
thinking it was going to hang out at $5 longer. And originally, I was going to roll it to the 550s. I didn't have enough cash in the account to do 550s because
Yeah.
these were in my Roth, right? Um, so I was just like, you know what, cancel them out, and I bought another 550 shares or something like that. So now I'm over 17,000 shares, which is nice.
Wow,
Um,
you're slightly ahead of me now, actually. So
yeah,
I
it's not a
do
competition. I just keep buying whenever I have money. So
may not be a
I'm not
competition
looking
to
at your account
you.
and I'm like, damn, Dave's ahead of me. I gotta. No.
I don't know. I have that competitive streak, and every
Do you?
time a viewer comments and says, "Oh, I've got like 16,000 shares. I've got 17,000 shares," I'm like, "Damn, I got to catch up to these guys." So
I
we'll
think about
see.
that, but I think most people have more cojones than I do because I would say this is what less than 6 or 7% of my portfolio. This Rocket Lab,
Hmm.
um, it is large in terms of the single because majority of probably close to 50% of my portfolios in the S&P are equivalents. So,
Yeah.
when I talk about 6 or 7% being in a single stock, it's a large portion. And the top 5 individual stocks is about 500,000. So it's like Palantir, Rocket Lab, Amazon, Bitcoin, etc. So all that combined, those top 5 or so positions is like 500,000. So for Rocket Lab to be about $100,000 of that is actually pretty significant. But I've realized that most people aren't diversified like I am, and most people are
Yeah.
like, I'm like 80% Rocket Lab. I'm like, you're insane, first and foremost. But at the same time, it's like they're going to look like absolute geniuses and I firmly believe that Rocket Lab will be eventually like a $50 stock, right? And like
Yeah.
in the time that I'm looking at, and so I'm going to look like the idiot because I had the opportunity to load the boat more and I didn't, versus this individual, put so in terms of their capital appreciation, their portfolio growth, they're going to be a lot better than I am. But
Well,
um,
assuming all goes to plan, I guess the
exactly,
diversification is in case, things don't work out how you expect. But I do have to admit, sometimes I feel like, I see, as you said, people out there with 80% Rocket Lab, and I feel like I've done so much research and conviction on the stock, but I hold the the diversification and the safe side as well, but sometimes I question that. So
yeah,
I
I
don't
hear
know.
that.
Maybe if it goes back to three, I'll just have to really load the boat, or three and a half. We'll see. Um,
Hmm.
what do you think about that, by the way? Because we're still looking at least mid next year for Neutron to launch. Now, we've had an amazing run from three and a half to like five plus, pushing six. Really amazing.
Huge run, yeah.
Yeah. Have we? have we left the threes behind permanently? Is there a chance that we go back there?
Mhm. I would say there's nothing. How do I say this? There's nothing that the company can do that would drag it to the threes. I think if anything were to drag it back to the high threes again, it would have to be a combination of the company and macroeconomic.
Mm-hmm.
Um, Especially once we get over the hurdle of hot fire, which I feel like is imminent at this point, like unless something drastic happens,
Yeah.
which is always plausible.
Yeah.
But I mean, we've had some successful, gas running through. We've also seen fire coming out of the engine, so it actually doing an actual full run test, I feel like is kind of inevitable at this point. I feel like with the pictures we've seen, I give it a very high likelihood,
Yeah.
high 90s%. So after that piece, I feel like there's another domino that really has been knocked down in terms of capital exposure risk, right? I think at that point it's really just carbon fiber testing of the tanks and then putting it all in one piece and putting it on the pad, and also pressure testing it, wet rehearsal, etc. Obviously that's going to take a year's time between now and then. But threes, I think, unless the market really turns over like it did in 2022, I don't think the threes are really possible. Low fours I could see again, mid fours I
Maybe.
could see again, but yeah, I
Yeah.
think even the threes that we were in, I felt like was just a fluke. Like I didn't understand why we were in the high threes, low
It
to
was
mid
odd.
threes.
Yeah.
It was really strange.
Bit of a perfect storm, maybe the capital raise, Peter Beck selling some shares,
Yeah, I could
but
see that.
yeah. Speaking of trades, so I was actually thinking about, I don't know if you're aware, but sometimes with very small amounts, I like to just make a kind of YOLO option trade for
Yeah,
fun. But we're talking like maybe $500 when,
yeah.
very, very small amounts. And I was thinking the other day, I'm like, man, I feel like we follow this so closely. I'm very confident Archimedes Hot Fire, we're talking 1.5 weeks, maybe from what I've heard. Um, Maybe I should just buy a call option, like really short term. Uh,
Mhm.
I don't know if I will, but I was thinking about it. We'll see.
I have thought about it the same. I feel like there's always a string. It's happened twice now, where there's been like for some reason no real reason for the stock to climb. So I think you and I have both been in since not direct listing day, but since the SPAC day. SPAC
I
day
was
is vector
actually
acquisition.
better than that. I ended up buying in after the drop. So
Okay,
yeah,
so there was like some point right after the they went from Vector Acquisition Group to Rocket Lab and actually started trading as Rocket Lab. The stock just went to $21 for like no
I've seen
reason.
that on the chart. Yeah.
Yeah, and I was like, is this it? Like, I was like, is this that easy? Like, I didn't expect it to be this quick. I was like, I feel like we're kind of far away, but I was like, I'm not gonna hate it. And I was selling covered calls, so I made a little bit of money. I should actually go back and look how much money. It wasn't a lot, but
Yeah.
it was enough. But my position was way smaller back then. Um, because I think I only started off with like 100 or 200 shares back in 2021. So it's definitely ramped it up since it's dropped over the past 2 to 3 years. And then last year the random spike up to like 850. And I feel
Yeah.
like that didn't really have much of a catalyst
I didn't
for it to
feel
do
like
that.
it did either. I remember at the time I was like, well, this is great, but
Yeah,
I'm not entirely sure what's causing it. So
exactly. So I don't know if it's just it's a lot of people moving in, and not a lot of people moving out of the stock. Like I guess we have seen over the past say 2 to 3 months, where we dropped into the low fours, high threes. But that's all it really is to me. It's always this ebbs and flows, people moving in, people moving out, and I feel like now we're getting so closer to neutron. We're within 12 months, fingers crossed. That I think if you've wanted to be in it, uh, at this point, you probably are. But I say that without the hot fire test. That could be another catalyst for large hedge funds or institutional investors to want to get in to say, oh, these guys are legit. They are on the path to putting a medium launch vehicle. I don't have the answer to that, but my hope is that's the case. So
hmm. So let's say it did run up to more like the eights again. Is that something you consider selling some more covered calls, or do you just want to
mm,
hang on to your shares?
I'd $8. I would look for. I wouldn't sell anything below 10 by any means,
No.
unless it was
So
like a
you
last day something.
so if it was at yeah, so okay. So if it was at 8 and you could get a decent premium for like a 10 strike maybe.
If there was like 1 or 2 days left, maybe.
Okay.
But not something that was like 6 months out or anything like
No.
that.
Okay.
I think I'll have to go back and check, but I think when it ran up to, I've done some of that where I've been able to get like a penny here, a penny there for a
Mhm.
contract, and there's like 1 or 2 days left, and I'm like, it's kind of free money. Like I don't really see, and also I'll gamble in that respect because when you have as many shares as you and I do, it's when you start multiplying up the contracts, it ends up being a couple $100. But I think the last time when it went up, I was selling it like 15 and $20 uh, covered calls. And
Wow.
so I didn't have nearly the amount of contracts though, so I wasn't
Yeah.
making a lot of money. But I'm fearful that you're going to see the stock move 100% in the matter of like 2 to 3 weeks when it does finally move, right? So we've been fortunate that the stock has moved probably like, I don't know, 60 to 80%
Yeah.
um, over the past, say, couple months. But uh, I'm afraid that when it does go and it does get to the $10 range, it does get to the $15 range, it's all going to happen in the matter of like 20 or 30 days, right?
I
Out of
find
this,
that
of the
is the
next eight,
case
18 months. Yeah.
like so often when I'm holding a stock. It's like 90% of the time it's doing nothing, but when it has that move, it's just like you better be in it at that time. So,
Yeah, yeah, and it's probably going to be pre-market. Like that's what we generally see is when the big moves happen, it opens up that way. There have been a couple times where it opens up flat and it goes up 8% in a day, but majority of the time when it shows up, it's up 5 or so% before the market even opens. And
yeah.
um, so anyway,
Yeah, we'll have to see. I've been thinking lately I would like more shares.
yeah,
um
you're a little more
psychologic
fluid though in the space, like because you do Astra Space, not the launch, but don't you do ASTS and you also do Redwire and
Yeah, I try to cover most of the publicly traded pure space companies. I haven't really gotten into too many of them, except
okay,
for Planet Labs, a small position. I wanted to buy Redwire because it was very close to like going positive in terms of earnings. And then I thought to myself, you know what? I think I can wait one more quarter, and then it doubled. So
yeah, yeah.
that's the kind of
That's
thing that
my fear
happened.
with Black Sky, honestly, as
Yeah,
well, because they're like I think they got like $2 or $3 million EBITDA positive on an adjusted basis last year or for the first quarter, and they're 150 $200 million company, and
yeah, small company.
I'm like, so it doesn't take much. Like you get it like 10, 20 million EBITDA positive, and now you're looking at a pretty cheap,
Yeah.
price to EBITDA. So it's like, at what point is it appropriate to and I'm trying to wonder if the first quarter was a fluke. Like I don't. So I'm hoping it doesn't end up the same way as Redwire for you. Yeah.
Yeah. Well, we'll see.
Yeah.
Um, so I was going to ask, I guess, politically, I heard
Yeah.
a theory out there. I'm not saying I agree with it, that maybe Musk kind of cozying up to Trump could have an impact on Rocket Lab in terms of trying to get more favor for SpaceX and that kind of thing if Trump
Mm,
were to be elected. Do you
yeah.
put much stock into that?
Specific that it would have a hindrance on Rocket Lab's growth opportunities with the Department
Yeah.
of Defense, or I haven't thought about that. What I do think about is I do think a Trump presidency is beneficial. I don't think that I don't want to say there's any showstoppers with either presidency. I would
Hmm.
say things have been pretty favorable from a Space Force perspective and Department of Defense perspective under Biden. But what I will say is I do believe that things will speed up probably with Trump, and there probably will be more emphasis on Space Force because it was his baby to grow that fifth arm of the armed forces, I guess, for the U.S.
Right.
So I'm curious. I still think there's a huge runway. By the way, I think people honestly think that the SDA contracts is like, oh, if you don't get the third one, you're done. It's like, no, we're talking about thousands of satellites, right? Like we're talking about many, many, many tranches. Like we're
Yeah.
talking about
Tranches,
probably
layers, then they have to replenish them as they
exactly,
deorbit. It's going to be constant. Yeah.
exactly. So
And in
I
terms of
don't have an answer
NSSL,
for
by
you.
the way, for launch, yeah, there's a lot more than just SDA in there. So
Yeah, yeah, but I don't have an answer. I haven't really thought about that. I know Elon and him have a good relationship, but I also know that Trump likes good deals. So, if he could get a better deal with, say, Rocket Lab versus SpaceX, I mean, depending on what they're doing, I could see both. But I still think that you're somewhat insulated, right? Because I don't really think there's positives and negatives in terms of, say, hypersonic rockets or something of the like. I think Rocket Lab obviously is a leg up because I don't really think SpaceX cares about that revenue stream. So I think from like a haste perspective, that's rather insulated. In fact, I think under a Trump presidency, it would be accelerated and hopefully grow. And I'm really excited to see that kind of, because we've really only done the one launch in June 2023. So I'm like waiting for the next taste launch so that we can hopefully get that going more on a quarterly basis and kind of insulate that revenue stream going forward. But yeah, there I could see how some favoritism could play in. I don't have an answer.
yeah, I think Haste is a really exciting business for them. I think there was a new startup that had a test recently, and they think could potentially be a challenge for the
I've seen
hypersonics
that.
business.
Yeah,
But
I've seen that.
yeah,
Is
did
that
you
the one where
see?
they like launch it like 50 feet in the air and then the like nation goes off or
I
something like
forget the
that?
details. I think it's
Yeah,
something that could be worth looking into, though. Maybe worth a video if I
yeah.
dive into that company. I think they may be more reusable or something.
Yeah, I'll be looking out for it.
In terms of SpaceX, they recently just had a failure. Did you see that?
I did. I was surprised. I've heard some rumors that they even knew that it was potentially kind of
I
iffy and
heard
they let it launch
people
anyway.
talking about that as well. To me, that seems bizarre that
That's bizarre.
they
Yeah,
would.
I like didn't think I was like I feel like I've heard. I had a buddy who interviewed at SpaceX. I don't know anyone that works there, but I feel like just based off company culture, I don't think unless it's a problem where they're growing so fast that they let a few bad eggs in. I've heard that SpaceX is pretty relentless on their engineering and yeah,
I believe it. And
yeah,
even like just the delay of getting the FAA to allow you to launch again if there's an investigation after an anomaly, I really don't see it as being worth it to them, even if they think maybe this thing has like a 10% chance of failing because they've been launching like every 3 days. So,
right, right, yeah. I think Elon said it in one of his, I don't know what Alexa wants. The I saw a really good video with I don't know if it's Everyday Astronaut or whom, and they were doing a tour of Starbase down in Boca Chica, and Elon basically was just like, you got things where you just have to test it, right? Something might be a 1 in 3, and you just have to test, and
hmm.
you might not find out to the 100th or 1,000th launch, right? There's things that you can't like really nailed to ground, and you have to put like a risk on them. And unfortunately, until you do that 1,000th launch or 1,001th launch, you might see it on the first launch, you might see it on the 2,000th launch. And I thought that was really interesting to hear about how like even though he's done, I don't want to say 1,000 launches at this point, but it's in the 400 or 500 range at this point, probably. Um, that he still thinks about those sorts of things. And it makes you think like, what was the Rocket Lab anomaly back in September 2023? Was that like something that they quantified and that was something that was going to happen like one out of every 20 launches? Or is that like a one out
Yeah.
of every 2,000? Did they even not have it quantified?
I
That
don't
sort of
even
thing where,
think like it was a very freak thing about electricity arcing and connecting.
right.
I don't even think it was like in the book
Exactly.
of a potential failure mode, but so many things apparently had to line up just right for it to happen. So
Exactly. We
yeah,
learned a lot about that in the oil and gas industry because of some of the blowouts and unfortunate events that have happened, like the Swiss cheese incidents, where you
yeah,
literally
that's
have to
what they
have
called it.
all the stars line up, 6 or 7 different things lining up for it actually to occur, right? Because it's like you can have gas in the room, but if there's no ignition source, then there's this gas in a room and it's not going to explode.
Right.
Versus, and how do you get the gas in the room? So there has to be a leak in the tank. So there's a leak in the tank, and then somehow the gas gets in the room, and then somebody has to show up and go smoke a cigarette or something like that, or there has to be an engine running in the room for it to explode. So those are 3 separate events that have to happen in order for that to occur. And would there be gas in that tank anyway, right? Who put the gas in the tank? That's the 4th event. It's things like that where
Yeah,
eventually
exactly.
it all has to line up. Yeah.
Yeah. Do you think it could have much of an impact on Rocket Lab, or is it kind of just completely different? I know the Western
Good
world
question.
relies so much on that rocket for ISS, for everything, obviously Starlink,
Yeah.
but
Good question. I mean, I anticipate they've had so many successful launches that hopefully it's quick, but I assume that the FAA launch or FAA investigation for Rocket Lab was going to be much quicker, and it took 2.5 months. I'm not sure what I don't know about that is though is a lot of it is internally led. So I think part of it. I'm curious, right? I think I'm curious if you were to put a timeline, and let's just say like how much of the time of the 2.5 months that we were grounded for Electron was FAA related versus internally led related. If it was like 90-10, was it 50-50? And so I'm kind of curious at the same time for SpaceX is how long would it be down? Would it be the 2.5 months?
I
Or
doubt.
yeah,
I think this thing's going to be fast tracked. I think they already
yeah,
submitted some kind of application to potentially launch again before they get a full like investigation done. But
yeah, yeah.
yeah, just so much relies on that rocket now, unfortunately.
Like if you compare, it's insane. If you remove SpaceX launches from the list, it's like everybody's basically on track with each other
Yeah,
comparatively because it's such a magnitude difference.
yeah.
Um, that like yeah. So anyway, it's pretty funny.
Hmm. Just curious, you have any other investment ideas you're looking at or trades right now? It doesn't even have to be space related, but anything you're doing with
Um,
Palantir or anything else?
so Palantir a couple weeks ago when it was in the low 20s, I did add 500 more shares. So I'm like 4,500 shares of that. Let me pull up my. I sold some cash secured puts in my big account um, on IWM, which is the Russell 2000.
Okay.
And so that was on Friday. That was basically a 205 put. It was just one. I was thinking about doing 2 or 3, but I just did one. So that was a couple $100, but that's up about 50% to date. I've been recently selling some puts on Celsius as well at $50. I think that you're going to see a pivot point. You could see the low 40s, but I'm okay. I think it's a good opportunity for the longer run. So
Celsius
um,
sounds familiar, but like, what do they do?
that is so there was Celsius, which was like the crypto. That's not that. So
Okay.
it's the energy drink. So if you
Oh,
like drink monsters and stuff like that, you probably see them in the. Actually, probably not because you're in Canada. They're starting to get big in Canada,
oh, we do have
but in
some
the
monsters
U.S.
around, but I
Yeah,
don't.
so they just started doing them like Costco and stuff in Canada, but it's like they are more like a lifestyle brand if you think about it that way. But they've grown massively in the United States, and so earlier this year, me and Chris Patel, one of the guys that I do a podcast with, um, we had taken a position, and he took a big position, and he did really
Mhm.
well. It went from like 45 to like $90 in a
Nice.
matter of a couple months, and now it's retraced a good bit
Nice.
based off of slowing sales. But I think overall it's still growing really well. So I've sold some puts. In worst case scenario, I get put those shares, and there's that. I do have some SoFi, but I haven't really bought more of SoFi. I have the S&P. One that I've done really well on over the past year is Dutch Bros. I'm up about 50% on that. I don't have
That's
nearly
a
enough
coffee,
shares.
right? Or
Yeah, it's
coffee
coffee. So
shop?
there's none in Canada or anything like that, but they're about to open up their like 900 or 950th store, and it's very franchise light. So they started off as like a franchise, and they were selling those. They realized that they're making like 30% gross margins, which is comparable to Starbucks, right? So, but 30% gross margins is pretty dang good. So they're like, well, why would we do franchises if we could do company owned stores? And so it's about a $5-6 billion company right now. They're
Hmm.
growing really rapidly. They're EBITDA positive. The
Okay.
really only reason that I think there might be a problem, they have very large growth ambitions, and so they're outspending their capital. Sorry, they're outspending their EBITDA basically at this point. So
Okay.
they do need to go into debt to be able to grow, but their EBITDA is growing very quickly. So it's like, at what point do they kind of level off the cash flow like deficit that they're currently in? And so I'm kind of curious as to how that works, but they're growing pretty well. I think they're probably going to get 1.2 billion in revenue this year. So that's done really well. I think it's a little overvalued now. I've been waiting for it to pull back into the mid 30s, but who knows?
Hmm.
I did buy some Bitcoin ETF, um, hoping for a quick turnaround on that one. I do think in the early 2025 timeframe. I don't have a large position in Bitcoin, but
Yeah.
um, I'm hoping in the early 2025 we'll see a peak.
Yeah. Personally, I got rid of all my crypto. I don't know. Um,
I hear you, man. It's
I'm
it's
not
it's a
against
crapshoot.
it. It's how do you value it? Like,
Yeah,
to me, it's tough, but
it's
there's definitely
tough.
some people out there who are huge on it. So,
It's tough. Other than that, I don't really.
well, that's plenty. And,
Yeah,
I think sometimes the hardest part is just holding when you're an investor,
yeah,
not making
hundred
that
percent,
impulsive move. So,
100%.
yeah, personally, I if I can see Rocket Lab giving me a decent premium on a $4 put, I will do that any day of the week. Unfortunately, right now you can't get it. My previous $4 put saw expired worthless, so it was nice to make a little money there. But yeah, the fives,
Is the
it
selling the puts to generate income because you don't want to buy more of the stock because it's over allocated, or is it if you can get it cheap enough, you're like, well, it's a no brainer at $4. I'd let it expire in the money and then take ownership, but you don't want to add, let's say, at like 550 because you already have so much, or
yeah, that kind of thing. I just like to try to generate some kind of regular income,
for
and
sure.
at that price, when you're talking say $4 plus 20-cent premium, like 380, to me, if I get assigned it, that's also a win. uh, then selling that put, I don't have to necessarily go ahead and sell something. I can if I need to and I get assigned it, but then I've got to deal with the taxes on those things as well. So yeah, mostly just
100%.
trying to generate a little bit of extra income as well as my dividends on the side.
Yeah, it's been nice. Couple $100 here, couple $100 there, but yeah, sometimes I'm just like, why? And then I wonder. Sometimes I'm like, I think at the time I was selling those because I was like, oh, I already have like 80 some thousand, and then now I'm like, I know it's gonna moon, right? I'm like, what's lose to me? I'm always thinking about if it goes to zero. Basically, I'm like, if I lose 80 or 85, that's not
Hmm.
a big deal. You know what I mean? I'm
Right.
like,
The
it's the
difference. Yeah.
same. It's the same number. Like if I lose 80 grand or $85,000, I don't think I will. But I'm like, it's different than saying 80 to 120,000. That's very different, right? So I'm like, and the portfolio gets bigger every day. So I'm like, I'm always okay stepping a little bit more on the gas. And I think if I've learned anything over the past 2 to 3 years, I would say that's the biggest mistake I've made with Palantir was I got originally on day one Palantir September 2020 when it direct listed. I bought 1,000 shares, so it was 10 grand in the hole, and I was like, okay, that's a big deal for me. Back in 2020, my portfolio was maybe a third of what it is now, maybe slightly larger,
Okay.
maybe slightly lower, and um, and the portfolio has grown obviously 3x since then. And so I've only gone from 1,000 shares to 4,500 shares, and between there, the stock went down to 4 or 5. Was it four? It was definitely $5 or $6. I don't know if it ever got to four, and I never loaded up really as much as I wanted. And so, I'm kind of
Yeah.
slapping myself, by not stepping on the gas. So that's one thing that I definitely did with Rocket Lab was it gave me $3, it gave me $4, it gave me low fives. Like, add when you can, and especially if your portfolio is growing, like keep it at that 5 or 6%, position in your portfolio, especially if you have conviction.
Yeah.
And so I can't go look back on Rocket Lab and be like, well, I didn't add because not too long ago it was less than 10,000 shares, and now
Yeah,
I'm
I
sitting at
remember you
17.
having a lot less than me, so you definitely did pull the trigger on that.
Yeah,
For
there's
me,
a
I
few
guess the
things I sold. Yeah,
challenge I run into is every time, well, not every time, I suppose, but usually when the stock drops low and I really want to add, that's when everything else has also dropped low. It's like, I'll be selling this lower than I feel like I need, like I have to sell it in order
right.
to buy Rocket Lab. But I do think in the long run it will pay off, but it's still kind of painful to do. And then
It's
just,
it's weird, man, because you'll see like Rocket Lab will stay flatline for a little bit, and you'll see something run up, and then Rocket Lab will go up, and then that other thing will pull back, and it's everything has their windows, uh, and so I think Rocket Lab's been in its little window where it's been in this channel
yeah,
and of like the mid threes to low fives, and I think its day is coming where it's going to break out of that and hopefully change the trajectory out of what it's been doing for the last 2 years. So
yeah.
fingers crossed.
I've also thought a little bit about leaps just because
Mm,
I think we're starting to get to the point where, we're talking 12 months maybe ish to Neutron launching, and that's supposed to be like the high tide mark for spending
yeah.
as they get, so profitability should follow not that long after that. So I don't know. I feel like if you hold a call when they go positive and profitable, you might do quite well.
So I've noticed a few companies now, um, Tesla, Palantir, the December 2026 leaps have just opened.
Hmm.
So that adds another, 200 some days
Yeah.
compared to the Januaries, right? So I've always been kind of weary of buying the January 2026s, but I'm like, December 2026 is almost like a no brainer. But the problem is the liquidity at the moment for the Decembers are probably going to be pretty tight. But I'm with you. It looks like for the Decembers, you could buy December 10s for, it looks like the last one was bought for $1.68 comparatively to say the January 10s were $1.05. So I
Okay.
don't know.
So, yeah,
Interesting. Definitely
definitely
interesting.
something I'll look into.
One of the things I have also done in the past, which is like a very bullish strategy, and I think that you might really enjoy,
Hmm.
um, is in the past, and I got in some trouble selling naked calls in 2021. So unfortunately, I wasn't able to live these out. Otherwise, I would have made a lot of money because I had to sell and close out some positions. But you could sell multiple puts, as you're well aware, and then use that premium to buy calls.
Yeah.
Um, so it's very a bullish strategy because everything
That's, yeah.
goes in the right direction. But if you think about it, you could sell like a five or like a $4.50 put for January 2026 or whatever, and use that premium to buy um, all your $10 leaps and stuff like that, and you'll probably come out pretty handsomely if things end up
Yeah.
in the right direction.
I mean, we
But it is
always think we're
stockpiling risk.
right. So, if you
Exactly.
by some weird happenstance, it plunged and then those puts get assigned, it could be scary. But Yeah, it's an interesting strategy. I've played around with options a bit on my Tesla, done okay on it overall. They've also had a great run, so actually just
Yeah, I
sold
was
some
going to add
covered
to
calls
do.
on it
Yeah, I was
myself.
going to ask if you sold covered calls
I
because that's
did.
interesting.
Um,
Really close to the money? Or are you saying I want to keep my golden
Two
goose? Or
75, one 250, and one and a few 275s. We'll see what
oh
happens. I
man,
think
you got a lot of Tesla. Shit, I didn't realize I was talking to the big baller over here.
no, I mean compared to you, I'm the small potatoes here.
Nah,
But Tesla was kind of like my, I guess for you, Palantir, where I put less into it than Rocket Lab, but it ran up a lot.
very good.
Um, so it did very well for me, and that's a large position now. Probably like my
Interesting.
largest single company, even though I've put more cash into Rocket Lab, I just
Yeah.
haven't. I don't know. I
So,
don't think I
so
can sell
is
Tesla.
is space? How much is space of your portfolio? I guess my question, because I know
It's
you.
basically just my Rocket Lab position and a small Planet Lab position right now.
Okay. Okay.
But I am bullish on the industry, and
Yeah.
I look at a lot of the companies open to adding more. Uh, if Redwire pulls back, I might pull the trigger on that one.
That's the thing. It's such a
Intuitive's interesting as
large
well.
intuitive. Oh yeah, that's a good point. I haven't looked at that in a while. But I mean, so it's probably like what 15%, 20% of your portfolio. I would say, maybe a little less, maybe a little more. It doesn't matter, but it won't take. Like I even think about this as well. I'm like, it doesn't take much for Rocket Lab to like double or triple, and then like your portfolio is completely lopsided. So like
Yeah,
that's the way I look at it. I'm like,
it's a
all right,
problem
it's
I'm
like
okay with having.
exactly. I'm like, I'm already looking at beach houses. Like I've been starting to buy like rental properties and stuff, and I'm like already looking. I'm like, huh. I'm like, if this thing goes up a little bit, I'm like the covered call premium. I'm like, I think about
Yeah.
it like Palantir. Like I wouldn't sell Palantir covered calls in like the sixes, but now that it's in like the 20s, I'm like selling my covered calls. I'm making a little bit of money, and I'm like,
Have you had any called away from you?
not yet.
No.
I have some that are underwater right now, but it's like by 50 cents. So
Okay.
I'm thinking I can get out of it. So no problems there. I just keep rolling it.
Yeah, roll it
Um,
forward.
yeah, just roll it forward. And so I'm hoping like when I just like imagining, I'm like I'm wishing it into existence. Rocket Lab is $50 a share. You know, I'm selling covered calls at 55. I'm getting a couple $1,000 in
Yeah.
premiums. And I'm using that to buy like a house down at the beach so I can rent it out, you know, to people. Um,
Well, maybe in the near
that's what
future.
I'm envisioning. Yeah, that's what
Yeah.
I'm envisioning.
I always find it's a little bit weird for me though, just thinking about my Tesla, because obviously I have a lot of shares and I really want the company to do well. But at the same time, I have these calls where I'm like, it'd be kind of nice if they expire worthless, but I don't know. It's just it's weird how you think about like, do I want them to go up right now or do I want it to go up like right after they expire? I don't know.
Yeah, I think I like to think of my covered calls as like it's nice, but I never chase it enough where it would kill the golden goose. So like
Right.
I never strangle it. I'm always just like always kind of put like I don't know what the right term is, but I always kind of look for like the 5 delta, so it's generally speaking pretty far out of the money.
Yeah.
And really the stock has to go on a pretty big move. Like Palantir went from like the low 20s to 28 in the matter of like a month and a half. So it's like, well, you know, who really could have forecasted that? So I know a lot of people that chase premium really heavy,
Hmm.
and then they get caught, and it's like, well, what do you expect? So I'm more of that person that really likes to let the stocks just be there, and if I collect 4 to 5% a year on covered calls, I'm like all about it. The way I look at it is if you have a very extensively large portfolio, let's just say $2 million, and you're making a 1 to 2% in dividends from that portfolio because you're invested in some non-dividend payers, but you're invested in
Yeah.
some dividend payers, or you're invested in the S&P or a dividend fund, etc. So you might be making, let's just say 2%. You don't need another like 18% in covered call income to be able to survive, right? You need 1 or 2%. And so if you think about it in that perspective, if you have a $2 million portfolio, 2% is what, $40,000. So if you're able to get another 2%, then you're going to have $80,000 of income coming in, 40 from the dividends, 40 from the covered calls. And so it's like you don't really need to chase like for the moon.
Yeah.
You know,
I learned that lesson a few years ago when I was like, okay,
yeah,
what is the biggest possible premium I can get? Of course, that was when I was just learning about options, but
exactly, because
learned since then.
you get the 100% number up front, right? And it's the
Yeah,
same thing with
exactly.
cash secured puts or just selling puts in general. You're like, ooh, but if I sell this, I'm gonna get $50 instead of 20, and you're like,
Yeah.
but do you actually want to buy it? And that's another thing is I think a lot of people sell things because of the premium on a stock, and they might not necessarily think about do they actually want to own that stock, right?
Yeah.
And so
Yeah. Now
I've
I
seen a lot of people
only trade
chase.
options on companies I want to hold, which is not how I started out, but learned that lesson.
Hmm, cool. Well, I'm curious. Yeah, I'm curious to see. Congratulations on Tesla. It's a big winner.
Yeah.
I'm just hoping that it persists, and I don't know.
I think it all comes down to
Interesting.
FSD. You know, that's got to be the next catalyst for them. So
Okay. Very
maybe
good.
a while, but
Yeah, I was really thinking about buying in the 150, 160 range, and I never. That's the problem with me and Tesla. I always wait until a week later, and it always bounces. So I've almost bought it now twice, and both times I'm like, yeah, just give it a little bit more, and then you wait too long, you get too greedy, and sometimes it's just not there. And it always goes back to like, what's the difference between $150 a share and 160 if you think it's eventually going to go to $400 anyway?
right.
Um, at the same time, you could have had some shares, and now I'm just sitting here. But it is what it
Just
is.
sitting there with quite a large investment account, so
Yeah,
I think you're
yeah. I
doing
guess
okay.
I can't be too hard on myself. I guess you're right.
Exactly.
Yeah.
All right. Been a pretty long conversation. I have
Yeah.
found it extremely interesting. I don't know, the viewers may have zoned out a little bit if they're not as familiar with options, but I find it fascinating for sure. Anything else you'd like to say, or any other ideas or thoughts you'd like to share with us before we call it?
No, I think I just ended like this. I mean, I think it's okay to have very high concentrations when your portfolio is small, but when you recognize that, the guys when you go to like open up account at Schwab or Fidelity, they kind of do hit the nail on the head, right? Think about five things. Think about your objective, your time horizon, your risk tolerance, how much capital you're going to be adding, and how active or passive you want to be, and really organize your strategy to align with that. And I've learned that as well. Like I didn't really have a strategy, and then over time, 5-10 years in, I really started to be like, oh wow, this is kind of my strategy, and you start making a lot less mistakes. The more you fondle your money, the more you kind of like move it around, the less efficient it is, and you end up
Hmm.
making mistakes. And so, if you could just take that, little bit of time, 15-20 minutes, write those five things down, and really think about it. A prime example of this is I could go into an example for each one of those five things. But the one thing I will say is like I learned this very early on. I was like, penny stocks are the way, right? I get my first $500 in my brokerage account. I'm like, I'm going to buy this penny stock and become a goddamn trillionaire, and I'm
Of
leaving the
course.
workforce
Yeah. Yeah.
tomorrow, right? 100%. Everyone feels that way.
Yeah.
Well, 10:30 rolls around. Matt, you come into this meeting. We have the weekly meeting right now, and I'm like, okay, cool. I go in there, and of course, I'm like watching it go up 1%, down 1%, up 1%, 1%. Well, in the weekly meeting, you can't be looking at your phone. You can't be looking at your laptop. I come back half hour later, and it's down 10%. And I'm like, what the hell is this, right? So what you have to recognize is like, you want to be a day trader, you got to have a lot of time on your hands to be able to look at these things, right? So
Yeah.
just recognize is like, are you going to be looking at it once a quarter, once a year? Do you never want to look at it? And then organize your portfolio accordingly, right? Like, don't be
Hmm.
trying to day trade if you can only look at it once every 6 months, right? Or that's how much you actually want to look at it, because you're just going to completely throw your money away and you're not going to get anywhere. So
Yeah.
really
I'm
just
not a
think about
huge
it.
day trader fan personally.
Yeah, yeah. So, but there are some people that can find a way and make it
Sure.
work. I'm just recognize I'm not that guy, and I recognize that investing in swing trading is something I can do. I look at the market every day. So, but yeah, just a little bit of insight for the folks listening.
All right. Well, thanks for coming on. I definitely enjoyed our discussion. For everyone watching, I will have links to Matt's YouTube and Twitter down in the comment description below. If you enjoyed, please do consider hitting subscribe and all that good stuff. And I will see you in the next one. Bye for now.
Thanks for having me on, Dave.
No
Cheers,
problem.
everybody.